All right, guys, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is 5 o'clock on Wednesday, July 27th. Geez, what a big day of events, earnings. I will go through some of those with you guys in this video without trying to make this video too long. Risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. So big risk on day in terms of what outperformed. Qs were up over 4% for the session. SPY was up 2.5% for the session. Small caps were also up over 2% for the session. Those have been pretty interesting this week, right? Not a lot of volatility at all in the small caps. So I'll get back to that in a minute. Bonds actually sold off through the session, so we could put this gets red. Don't forget, in this column I've got what the changes were for the day. In this column, I have what were the changes from the open. So, there's a couple surprises in here. Let's start with the one that was up the most. I mean, the cryptos. When we came in this morning, the cryptos were up today. It's just kind of amazing to me that how much they are a tell when you see how much, when you come in and you see that the cryptos are up like 4% for the day. Looking at Ethereum, right back to where it was just the other day, back at the top of the value area. I mean, up 17%. I mean, just the volatility in these things are pretty crazy. But that was up 17% for the session. Bitcoin also up a lot too, up 9%. But I would have to say that the Ethereum looks a lot better here, and we'll see if that could stay above 1578. If you're into the crypto trade, that's what I would be watching, because that is also back above the 50-day moving average. Maybe a false turn back. Yesterday, even as bad, like for as much as the Ethereum fell yesterday, it did come into the 20-day moving average. So anyway, I just thought that was an interesting tell for the day. Let's talk a little bit about the indices first. So S&P gets back above the value area again. Little bit of a couple inside days. And then yesterday, kind of what I refer to as a kick save, both in the S&P and the NASDAQ specifically. And again, just kind of shows you how there's the volatility on these Fed days, as well as just, this week is packed with earnings reports. Over 40% of the NASDAQ 100 reports this week. And I think we've already seen a good portion of that. But we got to the bottom of the value area in the S&P. And, we never really had a breakdown yesterday. I knew that we were coming into support yesterday. I didn't know if we were going to hold that 39.10, but we certainly do, and made it all the way through to, not only to the top of value, but we're actually trading above here. Let's talk about NASDAQ too for a second. NASDAQ kind of interesting. Because again, last week it was showing nice outperformance, came in pretty hard this week. And the one thing that was nice, even though it broke into the value area yesterday, was that it held the 20-day and the 50-day moving average yesterday. So kind of a back test, I would say. Now, we are not through last week's highs, but we're very close to it. So again, you've got some levels to watch here. Also one thing that I noted was, I begin to, when we have a day like this, where a lot of people have questions about what does this mean for the Fed and, this and that, I really rely upon the technical levels. The technical levels, and especially, the combination of the indicator that I use, which is volume at price, right? It is a proprietary indicator that we have in Thinkorswim called the market webs. But it just gives me a sense where I know that there's support and where I know that there's resistance, right? So 12,671 is resistance for the week. Again, this is short-term resistance, but again, it gives you a sense of where things might kind of come to an end. Also, on the 5-minute, I look for things on the 5-minute bar as well. We talked about this in the room, right? We took out this version point of control, and I thought that we could go higher, but a lot of times what happens is you actually come back down, right? And I actually said this in the room towards the end of the day. I said, I think we actually might come back down, by the end of the session back into this virgin point of control. So interesting that we've kind of stalled here a little bit. But is that necessarily a really bad thing? I don't know. I mean, I think that this market is going to do possibly 2 steps forward, 1 step back. It's going to have some weeks where it's 2 steps forward, 2 steps back, and it might have a week in there where it's 2 steps back and 1 step forward. So, what does that mean? Why am I giving that analogy? Because we just had a Fed meeting. Even though the market rallied on the Fed day, does it really leave us with any, did we hear any anything that can get us really excited regarding what the Fed said? It was kind of what I thought. I really rely on what the Fed fund futures and what the market is pricing in, right? So I was on a Twitter space earlier where they were debating whether or not it was going to be 75 or 100. It's like, guys, Fed fund futures is pricing in 75 basis points, right? That's what it is, and they don't want a surprise at this point, right? I think the Fed is very happy that the market was pricing in 75 basis points, which is a big, interest rate raise for one meeting. All right. So notice that. So my eyes always go here, right? This is the next Fed meeting, September, and they're implying 60 basis points, right? Well, that's exactly how we came into today, right? So there's no change. They didn't really, say anything that changed what the current situation is. They really want to see inflation come in, and they don't want to crash the economy, right? I mean, but they've got to get inflation down. So there's not much that they can really say until they start to see, and I think the Fed wants to see what they're doing have an effect, which is going to take, usually it's a little bit of a time. It takes time. I think it's like a few weeks to a month or so. I'm not an expert on this, but from when you raise interest rates, right, the effect doesn't immediately go into place. It takes a few weeks. It takes time, right? We're also going to get, so again, nothing changed from where we were in the beginning of the day, right? Now, of course, they had a press conference and they said things, but there really isn't any change in what the market was thinking in terms of a September rate hike, right? We're looking at 60 basis points. So somewhere in the middle between 50 and 75, exactly what we've been talking. If you've watched yesterday's video, same exact thing. All right. Now, what do we have on the economic radar that could change things, right? Well, I know GDP, the media is going to be all over that, and whether or not the number goes down or up. I'll tell you what, the market's not going to care about this number, right? The media will, but the market won't. The talking heads on Twitter will, but the market won't. Why? Because GDP is a lagging indicator. So it might move a little bit if it's really big up or big down, but really this number is the one that's going to be important. Right, it's the PCE deflator, so it's another gauge of inflation. And I say this just about every month, but the Fed, Powell specifically got a question today in the press conference. What do you look at more, the PCE deflator or the CPI report? So the PCE deflator, and he gave his reasons why. He did say that they're very close, and they are. If you actually Google the PCE deflator versus the CPI, it's almost the same components, but they're weighted differently. So they weight rents differently than, commodities, for example. But in any event, this is not going to get much attention as the CPI report. I don't know why, but the media loves the CPI report. So again, it's just kind of funny because he told you, if you're listening today, he said that they really look at the PCE deflator report. So that comes in on Friday, and that's looking 0.9 and 6.8. So again, that could possibly change this. Oops, go back to, right? That could possibly sway this number one way or another, depending upon, and they stagger these reports, right? The last time we did get the CPI report was a couple of weeks ago. It's nice because they don't, the CPI and the PPI report come out in the middle of the month, and this PCE deflator number comes out at the end of the month. All right. And then we also get personal income. So again, besides all the earnings reports, which we're going to get to in just a minute because there's a lot of them, but this is going to be the driver of the market to some extent. Right? As Marty's way always says, don't fight the Fed, right? Well, we have to see what the Fed is going to do, right? And there were some statements, and so why did the market rally today? Based on nothing really changing. Well, because there's a lot of bad news already priced into the market, and the market doesn't want any more bad news. So the fact that they're coming out and making, Powell made some statements that that they would kind of like to wait and see, even though that's what the market is pricing in. Right, there wasn't any any additional bad news. Remember, the report that came in a couple weeks ago was showing a much higher inflation report than what was expected. So the fact that and Powell did acknowledge that the CPI report, remember, came in on 7/13 9.1, which was higher than expected. So the fact that they're not coming in and doing anything more, I think, is why the market rallied, right? Because a lot has already been priced in, right? And then you're seeing this in earnings reports, right? All you have to do is basically just pay attention, right? With some of these names, and for example, Google, Microsoft, they did not report stellar earnings quarters yesterday. It's just the fact that there's so much negativity that's been priced into these stocks, right? The positioning has been very low, right? So that's another thing. Like, I look at every week, there's a report that comes out for the S&P positioning, right? The CFTC reports that, and the positioning is at multi-year lows for the institutions, right? And the speculators are net short, almost as much as they were back in 2020. So another thing that came out too was the SQQQ inflow. There was $1 billion that was added into the triple leverage short Q fund, right? I mentioned this to Bloomberg the other day, and they're like, geez, was there a rebalance or anything? I'm like, no, it tracks the Qs. There's no rebalance. Someone was really speculating, just like they have been in S&P futures, the speculators, right? Keep in mind that the SQQQ is for speculators, right? And they're often on the wrong side of the fence. It just is what it is with the speculators, right? So they put $1 billion short position over the last, the beginning of this week and last week, inflows into SQQQ, and you can find this on my Twitter feed, right? And that's really, when you look at it, it's triple leveraged, right? So that's $3 billion of a short position, right, that somebody put for this week. So again, what does that mean? Well, the positioning has been very bearish, right? And on the long side, it's been very light. So that's, in my opinion, that's why you're seeing some things kind of react even to the bad news, and Meta after hours, which I think is back down again, but this was not a good report at all, as far as I can see. And the stock's only down $4, right? And is above where it opened, right? So again, like, there's a lot of sentiment. There's a lot of market psychology, other than, just straight up fundamentals in the market, right? It has a lot to do with that, right? And if you've been doing this for as long as I have, you kind of know that, fundamental analysis is lacking and I'm not saying anything negative. There was a great quote that I saw on Twitter the other day. Fundamentals can help you pick stocks. Technicals can tell you when to buy them, right? So I don't know who said that, but I thought that was really good. So we went over the technicals in the S&P and in the Qs, right? We are above value, and we've got some levels to trade against. But am I expecting big follow through after today? No, I'm not. I think you have to take this market right now one day at a time, considering that until we see the inflation numbers, until we really get that Fed pivot, because they didn't pivot today. All right, for as far as I can tell. All right, so some names and some other points to cover. I brought up that quick chart of Meta, but I think there's many more interesting reports that came out after the close. Etsy had some good numbers. right? And if you look at this chart, this was a chart that I was looking at last week. I just didn't want to be as aggressive going into this, but we've talked about how you could use stage analysis, right? And I'm trying to think of who that is for stage analysis. Give me 1 second. Which is Stan Weinstein, who does stage analysis. But it kind of looks like, this looks like level 1, right? And it's trying to come out and maybe do level 2, right? Notice what it's doing after hours. There is a VPOC up here at 117. There's also one right around where it's trading right now, or very close to where it's trading, up at 110. Again, these version point of controls are really good for overhead supply, right? They're going to tell you where a lot of buyers and sellers have previously met up. That's why we went over that one in NASDAQ futures. So that's an interesting one. Also, Lending Club too also had good earnings. This is another one with, I would imagine, a pretty decent high short interest. Maybe this thing can get up to 17. But I think right now, like this analysis of going point A to point B, right now until the Fed changes, right? That's how I'm kind of looking at trades. A lot of them short-term swings, base hits, possibly doubles, but not looking for any major home runs right now in this market. I traded today Tesla. I thought that, after a couple days, I think I went over this chart yesterday, if not the day before, but it came in on a little bit lighter than volume than what we saw on the earnings day. A nice move here. What I would be watching for this is watch last week's highs. I still think like this is a name that I'm coming back to frequently because I do think that this can get to 875, right, which is the top of value on the weekly, and it's also a 1 hour VPOC. Another name that I thought was interesting is Monster Beverage, right? Look at where this thing is sitting here on the weekly chart. Right, I've been watching this for the last week because it's been going sideways. Today I decided to get into the position. So a little bit of a, I don't want to say chase because it wasn't up 3 or 4%, but you have to be cognizant right now of going after green candles. So it's got to stay above 97. I also tried to take two today, a name that I haven't looked at for a while. This one will go back on the watch list, but I like the setup here. It just hasn't triggered, right? And it almost did intraday today. Really didn't perform well today, which makes me think that there's something wrong here, but I would be watching for a break over 132 in this one. All right. A few other ones too that caught my eye for the day was, look at this, look at that, took out another VPOC, overhead supply, Aspen Technologies. Remember, this thing was acting so well for a while, and then just kind of gave back, made a lower high, another lower high, and then what a move today, up 8.3% back to the point of control for this particular period. All right, the semis were strong today. Right. Watch for tomorrow, 234.38. That was a little bit on the back of Texas Instruments, which had a strong day. Plus, they're still talking about whether or not the Congress is going to pass this plan. But Lam Research had good earnings too, which we haven't really seen good earnings out of Lam Research. For tomorrow, watch the level 478. All right. So that's another one to keep an eye on for tomorrow. What up? Ford is up decently. That's up 5% after the close. This is just movers after the hours. It's an interesting screen that I have up. How could I forget the solar names? And it looks like another one was up. This is a name that I added to the TTG trend portfolio. Finally, was a little bit tough in here. It tried a couple times. I think I even put this on Twitter that, this thing went up or had like 3 attempts to break through. Notice the last time it kind of hung around here, right? Because previously went up, down, up, down, up, down, up, down. This time it stayed above, right? So it kind of hung in there a bit. The other thing that was nice was last week it did close above the value area. So, maybe this thing could get out to new highs, right? What was the one that I just mentioned? As I just forgot it. Whoops, wrong screen. Nova. All right, this is another solar name. Let's see what this looks like. This one I don't think is going to set up for my system. but making a nice move. So again, group is strong. Look at TAN is up in the after hours too. And that gets you back above the 200-day moving average, right? So again, we'll kind of see how this goes. Everything, it really, really helps right now in this market to continue to look at things in terms of, where your stop is before you get into the trade, right? That should always be the rule, in my opinion. But I know some traders don't do that, right? But before you get into a trade, right? So I'm not in TAN. If I were to get into the solar ETF, right, my stop would be right at the 200-day moving average, right? And we'll see if this thing could begin to trend a little bit, right? And you can see what it's doing there in the after hours. So very interesting. All right, what else for the day? Another name that I thought was interesting too, which I also added to the TTG trend portfolio, was Synopsys. This name's up 4%. Again, it's a little bit of a slower mover. It did go up and take out that version point of control. So, maybe a place to take short-term profits, and let's see if it can put in some consolidation in here. Here are my trades for the day. I had bought some crowd at the end of the day yesterday, just taking a flyer on something that was really beaten up. Tesla was a good trade for me. I tried doing a little bit of day trading as well, but again, just, did a lot of watching. Right now I'm having a decent month. I'm content. My whole mission this month was basically to, have a profitable month. I didn't have high expectations for this month, right? I thought it was going to be kind of back and forth price action. So I didn't go crazy, right? I just basically wanted to have a nice profitable month, which I am. I think I'm up somewhere around like, 4% for the month, which is not huge, but that's a start, right? And my goal, every month for the rest of this year is to continue to have positive months. Remember, just to talk about my year in general, I had a very bad January, but I strung together positive months every month afterwards until last month, where I was just down like 2%, right? So, really kind of corrected that situation, and I look to be positive this year, right? And continue to outperform the indices. But again, it's 1 month at a time, and until the Fed really kind of does their pivot, I think that's my goal, is to, look for base hits, right? Look for if I can catch a double every now and then, really until this market kind of, until the Fed changes. But for longer term, it's, that's my trading account for longer term. I think that this is, this is what you want if you're a long-term investor, right? You want a reset, in terms of the price action. So in any event, I will leave it there. I think that's enough things to go over for one day. Guys, have a great night, and I'll see you tomorrow.